Welcome. I guess welcome in general.
Welcome in general. Thanks so
in
much
general.
for joining us today. Today, me and my good friend Austin are going to be going over the current state of the crypto market and why 2021 was not the year for crypto. Austin, thank you so much for joining today.
Thanks for having me on, Logan. I appreciate it. I'm excited to have a nice conversation and hopefully get some clarity in the air, right? We can kind of get a better idea of where we are in this market and what's going on, because I think a lot of people are worried right now, and I guess for good reason.
Yeah, absolutely.
Yeah.
And I think this is a topic that not a lot of people touch on, so I'm very excited to talk about it with you. And why don't you start us off with explaining to everybody kind of why is 2021 not the year for crypto, Austin?
Yeah, it's a tough question, and I think this all comes really back down to examining the charts, right? Something that me and you love to do. And when we look at the charts, it's pretty evident that all of we see 2021 was kind of when we saw retail enter the space of crypto, right? We saw crypto really push mainstream, very similar to what we saw in 2017. But in the year 2021, we have not really seen a confident trend to the upside, right? We've actually seen some sideways action, right, within a very broad range, and not a lot of in comparison to 2020, right? And obviously past bull markets per se with crypto, but yeah, 2021 I believe will be looked back on as a year of accumulation, right? I don't think that we're going to have any major blow off tops in the year 2021 like many people were suggesting. And obviously I will say this is something that I've been adamant about for quite a while. You as well. I have stated that I expected stuff to start picking up towards end of year, which I guess we saw. We saw Bitcoin make a new all-time high, but nonetheless, we're still in this range, which we're going to be visualizing here shortly. And yeah, it's just a lot of sideways action.
Yeah, we had a lot of, we were always looking as to what the market can do, and we had high expectations, I would say. Those expectations were not exactly met as, other things have come up, just like this flash crash that we had on the 3rd, the morning of the 4th, I believe. Just a lot of unexpected things, right? And a lot of coins just consolidated this year. A lot of coins that we expected to move, a lot of altcoins as well, and even Bitcoin, which is what we're going to showcase in this next couple of charts that we're looking at.
Yeah, it was rather underwhelming compared to the expectations that people had, right? So totally.
Absolutely.
So we can hop into some visuals now if you'd like.
I'd love to.
I would love to see that chart that you had, or I could hop on and share my screen. I know we're kind of examining stuff from the same perspective. Whatever you want to do works for me.
Yeah, why don't you get started?
All right, let's do this. So I'm going to share my screen here, and excuse me if should be able to see it. Perfect. All right. So this is a chart of Bitcoin, right? And we're on a 1-day chart on a logarithmic scale, and we're going to get rid of this. This box right here is just showcasing, and you have a much better visual. This box right here is just showcasing the year of 2020, right? So this was roughly January 1st up to the end of 2020, right? To the end of the year. And we can see that, other than the COVID capitulation that we had that brought us all the way down to under $4,000, we've been relatively straight up, and we've honestly been following this very strict trend line. We obviously started acknowledging this trend line with the capitulation. We had a few bounces off of it, and this, the bounces off this trend line was really the catapult that brought us up to those extreme levels that we've never seen before in Bitcoin, right? All the way up to 65,000. And then, something interesting happened where we saw this distribution top, right? Where Bitcoin kind of reached an all-time high. We didn't really have a blow off top. It was more or less just a distribution of money, right? And we could see that we kind of spent a lot of time up here. We repetitively made higher highs, right, in an uptrend, which was very bullish. And then, disaster struck and we made a lower high, which kind of sent us back down, right? And you could see here,
head and shoulders.
Right, yeah, head and shoulders. Yep. We can see here that we actually, on our way down, we found this line as support again. We were able to hold it for a short amount of time, and then eventually ended up succumbing to the power that is, I suppose, the bears, right? I don't know how else you would describe that, but we ended up breaking below this trend line. And you could see that, right, if we were to isolate 2021, and obviously we have these two support and resistance lines roughly around $29,000, $30,000, and then obviously in the bounds of the $60,000 range. Ever since 2021 really started, we've really just been chopping sideways in this range, right? Give or take. You know, I don't know how, right? It's been a year, right? Maybe some people would disagree. Maybe they think it's not a consolidation, but I think that we are in a consolidation. The one bearish thing that I have to point out, and I would call this, you know, a hidden trend line, as I've noticed, as I pointed out here, that we have found this line as support, and as soon as we broke it, we ended up flipping it into resistance, which we can see here. So if we were to even take away the consolidation, you could say that we are still in a uptrend, but you know, we did flip that support into resistance, which is bearish, and that does explain why we saw a top at around you know, $69,000, right? But although it was very brief, you know, it did manage to go ahead and tap the top of this trend line, and since then, you know, we've kind of rattled some people. We rattled especially the retail investors by coming all the way back down to 41,000. So we can see in 2021, right? Let's get rid of all this stuff. We explained that. You can see in 2021, it has really been a year of, you know, more or less very volatile consolidation, right? And we can see here, right? Let's go back and let's just kind of outline, right? Roughly drawn. Bitcoin, though Bitcoin was able to make all-time highs recently in November, it is still unable to confidently break above this this level, which we know is the 1.618, and I'll showcase that here shortly. So, you know, 2021 has just been the year of consolidation between, you know, this broad range of $30,000, and I would arguably say $70,000, right? We almost made it, but yeah. And so what does that mean for the future? Well, I guess that's what we'll be discussing here today. And honestly, nobody knows the answer to that question. We can only speculate and base our guesses on probability. But this actually lines up, right? If we are to consider the all-time high of Bitcoin back in 2017 at around $20,000, $19,000, give or take on your exchange, and we consider the bear market low that we saw at around, you know, almost $3,000 flat, 3,100, and we do a Fibonacci extension from here, from our bottom to top, we can actually see that our 1.618 lines up with where we've been getting rejected, or the top, you know, bounds of our consolidation for 2021. So it's really no secret that once we get over this level, I think we will see a rapid increase in price appreciation for Bitcoin and the overall cryptocurrency market. The kicker to that is, though, when is that going to take place? Is it going to take place this year? I have my doubts, right? That's why me and the lovely gentleman doing this call with me think that 2022, if not even 2023, will be the years that we see these big moves from Bitcoin. Logan, what are your thoughts? I know I kind of just covered a lot there.
No, you absolutely did. But getting back to where you said, you know, some people could debate this is consolidation. I would actually say this is textbook consolidation. That being said, because, you know, we have two tests to this top resistance, two tests to this bottom support. And like you said, we've been just moving around in this, what I would refer to as a rectangle, for the entire year, which we'll actually go over in the other chart that we have laid out. But Austin, you're talking a lot and you're showing a lot of indicators that people might think, you know, this looks bearish, this looks bad.
Yeah.
So what would you say to someone that's thinking, okay, wow, Austin's pointing out we're at the 161.8, we're still in this rectangle, we're bouncing off of that support turned resistance line. What would you say to that person? Are we headed to the bottom? Are we done the bull market?
No, I truly don't believe that the we have to be careful with this term of a bull market, right? A bull run, right? The influencers have chopped that word up for us, unfortunately. But no, I don't think that 69,000 was the top, and I'm pretty adamant about that. I do think we will be going higher. I have price targets upwards of, you know, $109,000 to $115,000, and I think that's inevitably where we're going to head, right? Right now, currently, Bitcoin has negative funding rate, right? Not a lot of money's being put into it, and we're still seeing these prices being held relatively well. So I don't know, right? This is just, to me, a big, very broad ranged accumulation for the entire market. And I think it'll be looked back at as so. Now, does that mean that we can't come lower? No. I mean, technically speaking, we could come significantly lower. We could shop in this range for who knows how long, right? It's really up to nobody. Nobody really knows. But I am pretty passionate of the idea that we are in a strong 5-wave impulse move. We can see that, right? People think that the bull market started after COVID. Well, I actually think that it started right at our bear market low, right? And then we had our DeFi summer of 2020 or 2019. We went all the way up to, you know, we saw Bitcoin rise all the way back up to around $14,000, got crushed by COVID. We actually made a low or a higher low, right? Which is, whoops, relatively, oops, let's get rid of this. My apologies. Let's draw this line here. See, this is relatively bullish, right? Even with COVID, we were still able to keep this uptrend structure going. So I do think that we will see, a price appreciation much higher, right? And I think this is just the beginning of our fifth wave, right? Our macro fifth wave. So I know some people may agree with me, they may disagree with me, but that's how I feel. That's what the data points. And I actually have a wonderful chart. Am I able to switch charts here?
Yeah, absolutely.
Yes. So what we've been doing is we've been trying to, and I'm sorry to jump around, Logan, but this is just another way to, this is just another way to view Bitcoin. And it's been very helpful to me in the past. And what it is it's taking into account our current economic situation with our lovely asset that is Bitcoin, right? And so what we did is we divided Bitcoin by the M2 money supply. If you guys don't know what the M2 money supply is, generally speaking, it's the general rate and the general thing that keeps track of our monetary supply in the United States, right? Kind of keeps track of inflation, how much money, how many dollar bills are floating around out there. Roughly speaking, that's what it keeps track of, right? And we can see if we go and view the M2 money supply on a chart by itself, we can see that in 2020 we saw this large uptick of monetary supply, and that's all due to obviously
quantitative easing,
right? In just the rate in which we're printing money to kind of ease the burden of this global pandemic. But when we take into account this data and overlay it with our Bitcoin chart, we actually see some pretty amazing things. I'm going to flipping around from chart to chart. We could see that we never actually made it back down to our local high, right? So the previous all-time high for Bitcoin was, like I said, around $20,000. A lot of people, right, during this time when we were coming down right here, they thought that we'd come back down to retest this high, right? Which from a technical perspective would make sense. But in fact, when you divide it by the M2 money supply, that's exactly what we did, right? And that identified a bottom for Bitcoin. You can see this right here, right? So
I remember when we first looked at this chart.
Yeah, and there are some other people that have acknowledged this, right? But it is very helpful for visualizing stuff differently, right? Kind of outside of the box. And so this is a really good indication. I think Bitcoin looks very, very healthy right now, right? What's more bullish than turning previous macro resistance into macro support? Can't really think of anything much more bullish than that. So I think Bitcoin looks relatively healthy right now, right? Obviously, in the short term, people would disagree, but where we are right now, I'm not complaining. And obviously, we use the same ideology with the S&P 500 too, right? When you combine the S&P 500 with the M2 money supply, you also get some very compelling things to look at. But this is a video about Bitcoin, and I'll try not to stray too far off topic. So I don't know. I think the market looks relatively okay. And I think this is just a big overreaction from people, right? It's amazing to me how everyone was super bullish, right? We were going to the moon a few days ago. We have one really, really red day, and then, the world's ending, right? And it's really not that easy to persuade you're not going to change my opinion overnight, right? You're going to have some serious confluence for me to say, okay, yeah, maybe it's time that we go into a multi-year accumulation range. So, I'm pretty passionate about the idea that 2022, if not 2023, will be the year for Bitcoin and the rest of cryptocurrency. And again, right, we have to be careful with the word Bitcoin, because is Bitcoin cryptocurrency? No, cryptocurrency is much more than Bitcoin. So, I'll say that 2022 will be the year for crypto.
And to touch on that a little bit more, you keep on saying 2022 or 2023.
Right.
So if it was 2023, do you think it would be another year of consolidation? Would it be a year of retracement? What would we see?
It could, right? It's tough, right? Could we remain in a consolidation period around here for a whole year? We could. I'm not saying it's out of the realm of possibility, but I think in 2022, leading up to 2023, we should see stuff start to get going. And until we're proven wrong with the data, that's what the data is suggesting for us. So, and we can see, the total cryptocurrency market, if we go over, or we can go look at total too, right? And ignore all these drawings. They're not really applicable to our conversation, but the general crypto market held up pretty damn well during this entire thing, right? We had this massive wick down. Let's get rid of this ugly yellow, orange, block there, we can see we had this nasty wick down, but it got eaten up really, really quickly. So, I would say that the general health of the market is being sustained rather well, right? It's a problem when we acknowledge Bitcoin as being the whole market, because it's not, right? There's more to crypto than just Bitcoin. If Bitcoin wants to go into a prolonged bear market, fine, do that. But I don't think that cryptocurrency as a whole will do that. I don't.
Especially at a time when BTC dominance is lower than we've seen it in a very long time.
I almost forgot, right? My lovely Bitcoin dominance chart. If you guys don't know what Bitcoin dominance is, it pretty much just measures how much of the total cryptocurrency market cap is Bitcoin's market cap taking up. So as we speak today, right, the total cryptocurrency market cap is just above $2 trillion, I believe. Don't quote me on that. I'd have to look at CoinMarketCap.
Yep, 2.3 right there.
And so Bitcoin's taking up around 40% of that. I am pretty passionate about the idea that, this bull market won't be over until we see Bitcoin dominance make a new all-time low from where it was in 2017, which is around 35%. I think that as crypto continues to mature, I think we will see Bitcoin dominance, retreat lower and lower. Just because I think that there's so many wonderful things in cryptocurrency. And you know how I feel, Logan. I think that Bitcoin is by no means the be-all, end-all of store of value, of digital cash. I think there's so many better alternatives, not shitting on Bitcoin, right? It's just how I feel. And I think that the market will, recognize the utility of other coins, and that in hand will drive Bitcoin dominance down. That doesn't mean that Bitcoin still can't appreciate rapidly in its USD valuation. It definitely can. It just means that the market as a whole will gain against Bitcoin. So, and you can see the trend is your friend, right? Where are we going? We've been going down since, right? Well, arguably since its inception of altcoins, right? Since the altcoin market really came along, we've seen Bitcoin dominance struggle. But, we can see in the peak, right, kind of around the bear market times, right, when things aren't really as exciting, we see Bitcoin dominance really rise. We actually saw it go all the way up to around 73%. And then since then, right, once bullish price action has been occurring for the rest of the market, we've seen a lot of speculation over a lot of altcoins. We see Bitcoin dominance dropping at a pretty rapid rate. So, I think the market looks fine. I really do. There's really no alarms being pulled in my head. The only alarm that I would consider to be of concern is if we broke down out of this consolidation here, right? If we broke our low of around $28,000, $29,000, right? And even then, right? Then we come back in with the technicals, something that I love. I still cannot make a case for a bear market because our 5-wave move would not be invalidated, right? So in order to invalidate our 5-wave move, we'd have to go below our wave 1, which would be around $14,000. So I think that Bitcoin actually has some extraordinary wiggle room to stay bullish, right? It can do a lot and still remain relatively macro bullish.
Yeah, absolutely can. Yeah.
But yeah, those are just my general thoughts, man. I think other than that, right, I know we're talking about Ethereum or Bitcoin, but I think that Ethereum is in a really good position to make appreciation against Bitcoin. ETH BTC looks wonderful. We actually just broke above major macro resistance, which is we've been fighting since, roughly 2018. So well over 1,300 days now, we've been fighting this resistance, and now we're seeing a break of that. So, the market, right, just because Bitcoin is struggling doesn't mean that other things won't do okay, right? ETH right now is sitting at $4,400, relatively unfazed by the move that was Bitcoin.
Describe that as unfazed.
That is unfazed, right? You can see, right, if anybody here, right, anybody watching this knows anything about candlestick anatomy, you can see that there are a lot of buyers for Ethereum under $4,000, right? Which is crazy to me, right? Because we were looking at Ethereum when it was just under $100, right? Not long ago. People think that's crazy, but it actually wasn't long ago, folks, that was the case. So just the fact that we're seeing that many buyers here for Ethereum, is bullish, and it tells me that crypto is more than just Bitcoin. And, I am pretty adamant about Ethereum pushing up into, that $8,000 range here, relatively soon, within the year, or not within 2021, but within 365 days from now. I think that's very, very feasible. So until we see the data change, that's objectively what I'm looking at.
Yeah, absolutely. And that's a very reasonable price target, I think.
Yeah, it's not too far, not too far gone. I know some people are saying, Ethereum to $40,000, Ethereum to $50,000 by this time. That's just, in my opinion, an unhealthy mindset to have. I do think that Ethereum can achieve those prices, but it's going to be with time. It's not going to happen overnight. If you enter this market looking for instant gratification or to become instantaneously a millionaire, I think you're going to have a very rough time, in this market. So it's all about being patient and investing into utility, right? It's funny how this conversation was about Bitcoin, but somehow I end up on an Ethereum chart. Guilty as charged, but yeah. Bitcoin is it's looking okay. I'm not complaining. Just got to deal with it. Got to be patient, and if we do dive into a little bit of a prolonged consolidation period, then it is what it is, and we'll deal with it.
We'll absolutely deal with it as it comes.
Yeah.
Awesome. Austin, if you don't mind, if you don't have anything else to show right now, I do have 2 resources that I'd love to share as well.
Yeah. Perhaps I need to stop sharing my screen.
Awesome. So here we are. I just pulled up my chart of Bitcoin, and this is just to elaborate further on Austin's point that he brought up in relation to how 2021 is simply not the year for crypto. But as we can see, in comparison to 2020, and we could also draw a comparison, obviously, between 2017. You can see the last 365 days from 2020, we went up a total of 670% from the low here, measured at the low of COVID, to the last day at its high on December 31st in 2020 to January 1st in 2021. And then obviously, when you compare that to the same 365 days in 2021, we've only went up from the low, the absolute low right here, at a price $29,027 all the way up to its high that we formed here, just around
69, give or take.
69K mark, 68.5, just around, 69 exactly. And that total rally from the low to the high was only a total of 111%. So comparing that,
still a wonderful return, right? But
without a doubt, a wonderful return. But yes, it's absolutely not the same as it was in our prior bull markets, obviously, right? So
obviously, yeah.
Drawing a comparison, what I also wanted to show you was, Austin, you mind talking really fast?
Yes, can you hear me?
I can, perfect.
Yes.
Awesome. So what I want to next pull up is a quick PDF I did on BTC. Let's pull up this. 1 second.
Take your time. And also I wanted to say, right, when we say that that 2021 is not the year for cryptocurrency, we're simply referring to price action, right? I would argue that 2021 will be looked at as one of the most monumental years for adoption, right? We're seeing the rise of, go watch a baseball game. You see FTX everywhere. Go watch a UFC event. You see crypto.com plastered all over the octagon. Go watch, I'm watching the World Chess Championships. I see Elgarand everywhere. I see Coinbase on the back of their chairs, right? So 2021 is a big, we're not undermining that 2021 isn't the year for crypto. It just simply isn't the year that we're going to make our big gains, right?
Yes, I think that was actually a very good, thing to bring up, especially with all the adoption that is happening this year. Obviously, there's a lot of large acquisitions, a lot of also retail investors, as you brought up in the beginning of this video, have flooded into the market. So it definitely was a very good year for crypto, but just not in terms of the percentage gains that we would have expected or, we are expecting moving forward.
Right, exactly. And I love the PDF that you're about to bring up, showing that the possible scenarios that we could see for Bitcoin. This is very informative, and I think it gives people a good idea of what's going on. And obviously, this is the main point that we come to these conclusions is utilizing technical analysis. I know some people have mixed opinions with technical analysis, but
the magic trend lines, the magic lines.
Unfortunately, right?
Yeah, it's all astrology, but
to each their own.
Yes, absolutely. And within that astrology, we make our living. So in this PDF that I made, it was the morning after, in which we had that large flash crash, sharp sell-off, however you want to refer to it. And in this, I highlight the current wave counts of Bitcoin and the current possibilities that we're facing. So namely right now, we're only facing 3 main possibilities within Bitcoin. One of those is the expanded flat, which is a special type of correction, which we'll get into. Our second possibility, and this is our current primary count, is wave 2 of wave 3, meaning this, this correction was expected. And not only expected, but we're actually just now due for a very impulsive wave, because wave 3 is always the most impulsive. So if we can get wave 3 of wave 3, we would very, very easily see the price targets that Austin named prior, that 109K to the 115K level blew out of the water. And then our third possibility that we're looking at is, unfortunately, the end of the bull run. This is not, not probable at the current moment, but it is something that we have to observe as a possibility.
You need to acknowledge the bear thesis, man. If you're not looking at both sides of the coin, then you might get burned. So,
absolutely. So to start off with our expanded flat, I know it says this is at the moment. This is a little bit outdated. Obviously, something has come up and we've shifted our primary count. But a flat correction is a Elliott wave pattern in which there is a 3-3-3 correction, meaning there's 3 waves within each wave. And typical Elliott wave corrections are a total of 3 waves. So that may sound confusing. But as you can see here, as you can see in my cursor, we have wave A, wave B, and wave C. This is all overall one wave labeled wave A, obviously. So there's 3 waves within wave A, completing that first 3 that we're looking for. And then our second 3 that we're looking for is 3 waves within wave B, this being wave B. And the reason that this is called an expanded flat is because wave B goes above the high of our prior wave 5, as you can see right here. And obviously within wave B, we have that A wave, B wave, and C wave. And now what we're looking for is our third 3. And in a flat correction, as you could imagine, it is flat, meaning our C wave will end around the same extreme as wave A. So remember, this is our macro wave A right here, this low where it says C. And as you can see, my beautiful arrows have pointed in a 3-wave correction. So obviously we've gotten this wave down. We did get a bit of a correction. And now we're actually starting to move down a little bit towards that wick that we formed. And these arrows are not an exact representation of where prices will go, but rather the manner in which they will move. And obviously a flat correction will end around this level where we ended wave A. So yeah, you can imagine. Oh, sorry. Go ahead, Austin.
No, I just loved you pointing out that it could be an expanded flat. And that is some of the things that you really never want to hear as a trader, because that can fool a lot of people, right? When you see something that seems to be in a clear impulse move that seems to break the high of our wave 3, you're like, okay, this is likely going to continue, but it didn't play out that way. So these expanded flats can definitely fool even some of the best traders out there, right? Rough price action for sure.
This is what a lot of people refer to as a fake out. Because we did, as you just said, this was our all-time high prior, and we did break above it, but barely.
And we held that general area as support, and we saw momentum going up, and we were pushing 70,000. All looked well, and then we just kind of got shot down. So. Yep.
And now that we're on the topic, just to quickly go off, do you think that this decline in Bitcoin was any bit related to the recent Omicron COVID variant?
Could be. I want to say there's no way of me actually answering that question, because we go look at the S&P 500, right? We were in a typical correction that was going to probably happen, whether or not I don't even know how to say the word Omicron, right? If that happened or not, right? We were due for a correction in some markets. It could be, but I think there's more to the story than just a COVID variant.
Yeah, I agree. And actually, we agree because there's facts as to why we agree. Within this candle that we saw, over 1,500 Bitcoin were sold in a single minute. There was over $2 billion liquidated in over-leveraged accounts, and over 140,000 accounts were completely closed. Remarkable numbers all around the board.
Definitely a big cleanup. It was kind of like a purge of all the leverage longs, right? A lot of people were safely leveraged long below the top of our A wave, right? Which had a lot of people had their liquidation point at a relatively safe spot, right? So Was this a coordinated attack to, like I said, liquidate those people or purge them? I mean, could be. I'm not a conspiracy theorist, but Logan is correct, right? There were a lot of Bitcoin sold at one moment, and a lot of people got liquidated, man. So, the market's not going to let everybody win, unfortunately.
Absolutely. And it's just interesting coming at a time where our open interest was, I believe it's the highest it's ever been. Open interest being the number of open leveraged contracts at the time. We've never seen these numbers in reference to the overall leverage that the market's been using. Everybody is essentially using leverage. It's quite crazy.
It is crazy. You're right.
Yeah. If we see this play out, this would obviously lead to months of consolidation. And again, a retracement all the way down to nearly 30K, a 40% correction from where we are.
And if this were to play out, then we could see the narrative of 2022, 2023 being that time, because
100%.
this would suggest a, multi-month long consolidation. So
yeah, absolutely. And it's actually interesting that you bring that up, because now, out of our three possibilities that we're looking at, two of which are bullish. This isn't necessarily bullish in the short term, but in the long term, it's very bullish.
This makes it more bullish in the short term, because the longer that we spend time consolidating and accumulating, the higher the potential price will be for Bitcoin when it actually does find its top. Because guys, I really just there's just no way that 69,000 was the top. And it could have been, but there's just so much data suggesting that it isn't. I have a very difficult time believing that it is. So yeah. I'm not exiting any crypto positions. I'm only adding. If you want to sell, right? Maybe if it's better for you, but market looks just fine.
I completely agree. And that brings us into our second possibility, which is our current primary count, as I mentioned prior. And this is entailing, again, an LE wave count where we have a confirmation and retest, and as well as a hold of the 61.8 level. And both of these things that were stated on the 4th are still in play. They're still valid. And as you can see here, I drew a box out labeling our 38.2 to the 61.8. Let me see if I can zoom in a little bit for you guys. And as you can see here, we bounced off with a wick to that level. Obviously, we wicked through it, but the candle closed right there. And we just got more consolidation around this level. That being said, we're looking at a macro wave 2 that in wave 3. So what this means is, if you look at the red count here, right? We have wave 1, wave 2, and then wave 3 up here. So we know in impulse waves, there are always 5 waves, 5 subdivisions. So as you can see, we're breaking down the subdivision of a overall macro wave 3. And as there are 5 waves in each impulse wave, we're looking for that 5-wave move within our wave 3. As you can see here, we have wave 1. This would be wave 2, our last correction, which is valid because we did not take out the low of wave 1. And then we would be anticipating for wave 3. And this profit zone is drawn around the $77,000 level. Yeah. This was my first profit zone. Obviously, we have the higher ones at 109 to 115. But this would be our first take profit. And as you can see, we could definitely see wave 3 take us up there. And then a wave 4 retracement, wave 3 to finish. And then obviously that would follow with a wave 4 and then another push to the upside. And as you can see, just by looking at this, this would entail for a much higher upside potential than we were originally looking for. Again, I wouldn't be upset about that. Would you be surprised if we blew past 115,000, Austin?
No, I expect to. Like I said, we could right. I think the general price target where we're going to see the top relatively be is going to be around that level. But could we wick up to $200,000? Sure, right? We're on a logarithmic chart, right? The higher we go, it's gonna rapidly appreciate in price, right? That last push that we had to the upside was almost $10,000, right? Keep in mind it's on a logarithmic chart, meaning that our y-axis is exponential. And the other thing I want to say that suggests that I thought this ideology wasn't accurate when it was first presented to me, like that we'd recover it kind of like in a V, how you have us showcased. But the thing that makes this interesting is not only were we able to hold the 50-week SMA, but this capitulation that we had was very similar fractal-wise to what we saw during COVID, right? If we kind of were steadily decreasing, and we saw a sharp drop And then what's happening after that? We're seeing a lot of buying pressure. And then if this wave count were to play out, it would in fact look like a mini COVID capitulation,
Yeah.
which
Yes,
is
it
very,
would.
very interesting. So I'm not leaving this wave count out of the mix by any means. Definitely possible, and I see a lot of similarities between what we saw in March of 2020 and right now, just as obviously just scaled down a little bit.
Yeah, absolutely.
So and that could go along with what we said, right? Like Omicron being a thing that caused that capitulation. I don't know if the new COVID variant would, if that's the sole reason, but some things are lining up when you look at it from that narrative.
Yeah, absolutely. And then this brings us into our third and last potential possibility that we're looking at with Bitcoin. And that's actually what I wrote here. Our last and hopefully least likely count is the end of our bull run and bull cycle. So what we're looking at here is a complete 5-wave move. And, this is technically correct because the only prerequisite for wave 5 is that it ends above wave 3. I mean, we know in some cases that actually rings to not be the case when we have truncated 5th waves, although they're very, very uncommon. They are a thing, but they're very uncommon. We did see wave 5 go past wave 3, so this is not a truncation, but it would be a very, very short wave 5. That's why I don't think it's our most likely count. And I personally don't see us, breaking through all of these support levels that we have very easily. That's why I think the bullish count, our end of wave 2 to move into wave 3, is our primary count. Our expanded flat is our second alternative count. And then this would be our third alternative count. So is this possible? Yes, it is possible. Is it likely? I don't think so, but it's definitely worth looking at and paying attention to, especially if we get a break below this $30,000 level that we have here marked out for wave 4. I know we touched on that prior. If we get a close below that level, it would be shocking.
Concerning.
It would definitely be concerning. Very, very concerning. Yep. But as I label here, this ABC move could take us back below $14,000 if this is the case, because if this 5-wave move is complete, then we no longer need to hold above that $14,000 level. There's no real support keeping us above there.
We could wave. Right. The only thing that I have doubts about going back down to that level is just the sheer amount of buyers that would show up, especially as we start to drop below $20,000. I think everybody and their mom would start buying Bitcoin, or maybe not. Maybe people would be run away in fear and sell instead. I'm not sure. But yeah, it's definitely it's possible. 100%. It doesn't agree with a lot of stuff that the data that we currently have, though. That's why we think it's the least likely scenario, right? That's why me and Logan are so adamant that $69,000 was not the top. I think the bears are buzzing a little too prematurely with this one. And, they had their day of fun, right? They had their red candle the other day and they declared victory, but bears are going to do what they're going to do. And I think they will be, unfortunately, proven wrong, right? Sorry to the bears out there, but it might not bode well for you. And, let me say this, guys. We're just talking about this, short to medium term. What's going to happen in the next year, 2 years? Let's fast forward 10 years. Is this relevant at all? No. This is not relevant. I can promise you for a fact, 99.99999% sure, Bitcoin will be trading above $69,000 in the year 2031. I can very confidently tell you that. And if it's not, then, come back to this video and you can roast me and tell me that I'm an idiot.
Call us mean names in the comments.
Yeah, you can call me mean names. I just don't see it being probable. This is a phenomena that we don't see often, the emergence of new markets. It's being adopted quicker than the internet. It's like my favorite saying, right? But it's a fact. It's objectively a fact if you compare them on a growth scale and adoption scale. So if this is a bear market that we're in, take advantage of it because, these prices aren't going to stay low forever. And Logan, what do we say, man? I think we're going to look back, and we were on the phone the other night saying that the price of Bitcoin right now is extremely cheap for its lifespan as an asset.
Yeah, absolutely.
Exorbitantly cheap. Yeah. Yep.
Regardless of your perspective on the utility of Bitcoin, this is very, very cheap. We will most likely be seeing Bitcoin trading at multiples higher than what we're seeing now.
Yeah, I mean, I think $1 million Bitcoin is not out of the question. I don't. What would that be? That would be, what is that, like a $20 trillion market cap? That's kind of crazy, but Is it possible? Absolutely, right? If people actually want to treat it as the new age gold, right? You have to remember gold has over an $11 trillion market cap, right? That would put Bitcoin well over $500,000 just if it wants to go up to that. So, and then when you combine, right? I'm not a Bitcoin maximalist. I think there's better things, but Bitcoin does have more utility than gold, in my opinion, to a certain extent, right? I'm not, right? Gold we use to make electrical parts and what have you, but I do think that Bitcoin is capable of absorbing trillions of dollars worth of monetary value in its market cap. So
I think it will absolutely be doing so, especially in the future. You know, if we keep up this adoption, like we said, it's growing just like the internet. If we continue growing, you know, probably faster, because that's what humans do. We continue to innovate.
Right.
I don't think we can possibly fathom the entire, you know, total market cap in the next 10 years, 15
Yeah.
years.
And then we consider, right? I mean, you say it all the time. It's like, well, we question the utility of Bitcoin. If Bitcoin's going to possibly have these numbers, what is the better version of Bitcoin going to do? Whatever that is, right? What is that going to do? What is the opportunity? What is the opportunity in this market right now? I think it's right now, there's so much opportunity that it's like people are relatively blind to it. It's unbelievable.
Blind and or uneducated on the topic.
Right. Well, they think it's too good to be true. There's just so much utility. We are in this early stage. Like, guys, if you go back and look at the rise of search engines, right? Google was like the 15th search engine to form, right? There was so many before, right? Yahoo was well established before Google ever became a thing.
Do you know what Go.com is?
Go.com?
Yeah.
Yeah, yep. That's
actually, I was hoping you'd say no, but it's since been retired.
Right. They were made well before, I think, even Yahoo, right? Yeah. Go.com, right? We saw the rise of these internet databases, aka nowadays search engines, right? In the early 90s, right? Is the first iteration of internet database search engines the ones that we use now? Absolutely not. And the entire space, right, since the .com bubble has essentially, right, I would argue it 100x'd. You know, yes, we did have this parabolic blow off top in the year 2000. We came crashing back down. People thought it was the end, but geez, I think internet-based services, anything on the internet, has done pretty well in the past 20 years. So, you know,
I would agree.
Yeah. So it's just a matter about choosing the right ones. And I don't think there's really anything that's going to stop this market in its path. Yes, we're going to have some bumps in the road, but I can see the light at the end of the tunnel. You know,
as can I. I think that's a beautiful way to wrap this up.
Very nice, Logan. I appreciate you having me on, as always.
I thank you immensely for coming on.
Yeah.
We have some more videos planned and will be coming up shortly. This is all going on the OBR YouTube channel. So
again, follow me on Twitter. Follow me on Twitter. ALLICNAC.
Follow Licknack on Twitter.
Yeah,
the links will obviously be in the bio as well.
Follow Logan as well.
Follow everybody at OBR.
Follow everybody. All right, guys. Yeah. All righty, Logan. Thank you.